Even after watching tons of Silver Bullet videos, you still can't be profitable trading it. So in today's video, I have refined the Silver Bullet for you to make it even simpler, more mechanical, and easier to understand, so you can achieve results like this. It doesn't require any daily bias. We will only take one trade per day at a specific time, and it has a very high win rate. We will go through the rules for trading the Diamond Bullet strategy, which pairs to trade, live market examples, and indicators to make it even easier for you. Make sure to watch till the end, or else you might miss an important detail, and it will not work as expected. So grab your notebooks, and let's get started. First of all, we have to come to our charts at 9:30 a.m. On the 5-minute time frame, we will identify where our liquidity levels are. This could be buy-side liquidity or sell-side liquidity levels. After that, we have to wait for one of those liquidity levels to be taken out. We want to see a slight sweep and wick through the liquidity level, not a candle closure. Once liquidity is taken, we will drop down to a 1-minute time frame and wait for the price to give us a market structure shift in the opposite direction with displacement, creating a fair value gap. To make sure we are on the same page, let me give you a recap and simplify what market structure shift, displacement, and fair value gap mean. Displacement is a big, energetic move in one direction, suggesting that the price has a clear favor to one side of the market. In simple words, displacement is represented by huge red bearish candles or huge green bullish candles. A fair value gap, FVG, is a 3-candlestick pattern where the middle candle has an open area that is not overlapped by the first and last candle's body or wick. It means that the price only offered fair value to one side, and the price will most likely return to the fair value gap to balance it. It acts like a magnet. A market structure shift occurs when the price closes below the recent swing point after taking out the opposite swing point. It must have a candle closure, otherwise, it will be considered a liquidity sweep where we just sweep through the swing point, which is the opposite of a market structure shift. Now that we have cleared the basic terms, after the market structure shift on a 1-minute time frame, we will be entering the trade on a fair value gap created during the market structure shift. The stop loss will be above the recent swing point, and the target will be the lowest hanging fruit, which is the closest opposing side liquidity, or you can simply target a 1 to 2 risk to reward ratio. As soon as the trade reaches a 0.75 risk to reward ratio, you have to close 75% of the position. We won't go break even at any point. This risk management technique will help you increase your win rate significantly and secure profits even if the price reverses and hits our stop loss. Our trading window will be from 10 a.m. to 11 p.m. New York local time. This is when we will be looking for our entry. The market structure shift and liquidity sweep can happen before the time window, but your entry must be within the time window. As soon as the time window ends, if we don't have any setup, you have to stop trading, close your charts, and come back the next day. Let's discuss the pairs where this strategy works perfectly, then we will move to our examples. The diamond strategy works on all pairs and asset classes, especially the USD-related pairs that are most active and volatile during the New York session. This includes Euro USD, GBP USD, Nasdaq 100, S&P 500, and more. I suggest sticking to major pairs for better spreads and trading conditions. For our first example, we are on the 5-minute time frame for Euro USD, 30 minutes before our trading window. We will mark the most recent buy-side and sell-side liquidity. Let me also mark the start of our trading window, which is at 10 a.m., and the end of our trading window, which is at 11 a.m. Let's play the price ahead and wait for one of the liquidity levels to be taken. Over here, we can see that we took the buy-side liquidity, and now we will drop down to a 1-minute time frame and wait for the market structure shift when the price closes below this recent swing low that created the new high. Remember, we want a candle closure, not a wick through. The price closed below the recent low with displacement, leaving behind multiple fair value gaps. Our trading window has not started yet, so I will not take any trades and will wait patiently to see what the price has to offer us. It went below and took out the sell side liquidity as well, but we still have these fair value gaps unfilled. The price started consolidating within the range until our trading window. Now that our trading window has begun, I will put my limit order on the extreme fair value gap we created earlier. The stop loss will be above the recent swing high. And for the profit target, you can aim for a 1 to 2 risk to reward ratio or the opposing sell side liquidity. Let me place my trade risking 2%. Let me play the price ahead and see how it goes. The price came to that extreme fair value gap, triggering us into the trade. See how it is respecting the fair value gap. Now I am looking to take partials at 0.75R. Now I will take 75% of the position off and let the remaining run to the take profit. The price came back to our entry once again before melting downwards. I usually trail my stop loss to the last protected low once we create a new break of structure, because the price has no reason to come back to this low unless it wants to reverse and continue. And soon after that, we hit our TP, giving us a beautiful 1 to 4 risk to reward trade, making us $3,500 from just one trade. The price kept going even further. Depending on your trade management, you could have trailed your stop loss for even more profits. Before moving forward to our next example, if you want to take a shortcut to profitability, then apply for the Trading Titan Blueprint by checking out the first link in the description. We have limited spots, so make a wise decision. For our next example, we are on the 5-minute time frame for the Australian dollar versus the USD at 9:30, 30 minutes before our trading window. However, you can notice we have PMI at 10 a.m., right at the start of our trading window. Since this is high-impact news, we have to avoid trading on days with high-impact news. So, let's skip to the next day. Moving on to the next day, we have no news, so we are good to go. I will mark all the recent swing points and wait for the liquidity sweep. As you can see here, we took out the sell side liquidity. Let me also mark the start and end of our trading window for better demonstration. Now, I will drop down to the 1-minute time frame and look for our entry model to form. I want the price to close above the recent swing high that creates a new low. Over here, we got our market structure shift, but I can't find any unfilled fair value gaps. So I won't take any trades yet, but will wait and see what the price has to offer. Soon after that, the price went lower, creating a new low. You would have been stopped out if you had forced a trade right there. That's why you have to be patient. Let's see what the price does next. We got displacement higher, creating a huge fair value gap and giving us our change in the state of delivery. We are about to hit 10 a.m., so I will be placing my limit order on top of the fair value gap. Our stop loss will be below the recent swing low, and for the profit target, I will be aiming for a 1 to 2R. Let me go ahead and place my trade and see how it plays out. The price tapped into our fair value gap, respecting it. Now I am looking to take my partials at 0.75R. I will be taking 75% off and letting the remaining position run. Just like that, we hit our take profit, making us around $2,800. Jumping to our next example, we are on Nasdaq, on a 5-minute time frame. We will mark the recent swing highs and swing lows. I will also mark our trading window from 10 a.m. to 11 a.m. Let's fast forward the price and see what it has to offer. We violated the swing high, so I will drop down to a 1-minute time frame and wait patiently for the market structure shift next. After getting our market structure shift, which left behind this fair value gap, we are still not in our time window, so we will wait. The price went ahead and disrespected that fair value gap, creating a new high. That is exactly why we have to trade within the time window, because timing is more important than the price. I will play the price ahead and wait for the new market structure shift. We finally got our market structure shift with a candle body closure. We created not one, but 2 fair value gaps. In this situation, you take entry from the lower fair value gap if you want more chances to get tagged into the trade and don't want to miss out. I personally use the extreme fair value gap because it gives me a better risk to reward ratio. I will place my limit order in the middle of the fair value gap. As always, the stop loss will be above the recent swing high, and for the target, we will aim for a classic 1 to 2RR. Let's play the price ahead and see how it goes. The price gave us our entry, and now I am looking to take my partials. Now, I will let the remaining position run till the TP. Unfortunately, the price went and hit our stop loss, taking us out of the trade. Even though we lost this trade, we still made around $700. That's why this strategy is so powerful. Let's summarize all the rules in our trading plan before I share the golden indicator. Start by analyzing your charts at 9:30 a.m. New York local time, identifying recent swing highs and swing lows on a 5-minute time frame. Next, wait for one of these liquidity levels to be swept away, ideally before or during our trading window from 10 a.m. to 11 a.m. Following the liquidity sweep, patiently observe the market for a clear market structure shift, which should leave behind a fair value gap. When such a gap forms, take your entry, aiming for a profit target of 1 to 2 risk to reward ratio, while setting your stop loss just above the recent swing high. To make things easier for you, you can also use indicators that automatically mark buy side and sell side liquidity, eliminating the need for manual marking. Consider using indicators like liquidity swings by Lux Algo or liquidity levels by Sonar Lab. If this video gets 182 likes, I will attempt a funding challenge and document the entire process using this strategy. The PDF file for this strategy will be available to download on my free Telegram channel. The link is in the description. If you want to increase your win rate, accuracy, and profits using this strategy, watch the draw on liquidity video on the screen. Don't forget to check out the Trading Titan blueprint before it closes. See you very soon. Peace.